Welcome back to Asymmetric Edge. As always, please consider subscribing and leaving a like on the video. It helps greatly. Today, we're going to take VWAP from I've seen that line before to I can actually use this to trade better today. I'll show you exactly what VWAP is, how institutions use it, and three practical ways to deploy it: intraday, multi-day, and anchored. We'll keep the math simple, the process precise, and the execution disciplined. By the end, you know when to trust VWAP, when to ignore it, and how to make it a part of a professional framework. Now, we're going to go over the basics here of VWAP. So this is a pretty beginner video, but I think it'll be helpful just to fine tune your skills if you're already an expert or if you already use this in your daily trading. VWAP stands for volume weighted average price. Here's the formula. Think of it as the average price paid across all trades so far today, but heavier trades carry more weight. Every dot of VWAP on your intraday chart says, at this moment, if you blend price with where the volume actually happened, here's the true average. Why does it matter? VWAP gives you insight into trend and value. If price is above VWAP, buyers on average are winning today. If price is below VWAP, sellers have the edge. That's the value side. The trend side comes from how price behaves when it interacts with that line. Does it respect VWAP as support, or does it fail at VWAP and become resistance? Those behaviors are very tradable. Let's get rid of this now. Now, it's very important to know where your data is pulling from or where your VWAP data is coming from. Here's the first trap most traders fall into. You flip time frames and you expect VWAP to mean the same thing. It doesn't. For example, the chart on the screen currently is a 10-minute chart with the daily VWAP. Right now, the VWAP's at 92.23, but if we flip to a 1-minute chart, you'll see the VWAP's 92.31. They don't mean the same thing. A VWAP on a 1-minute chart intraday is definitely not the same as a VWAP style line that's on the daily charts. Always ask yourself, what period is my VWAP calculating and from when? If you're using TradingView, you can come up here and go to settings, change your settings here. I like to use open, high, low, close, but that's just personal preference. If you're just starting out, I would just leave the settings the same. The only thing I would suggest doing is coming here. I don't like the upper and lower bands, but again, personal preference. I'd come up here, make whatever color you want that stands out to you, and thicken it. It starts off really thin. It's just kind of hard to see. So thickening it up a little bit just helps you make it more visible and easier to use to trade. Also in your VWAP trading view settings, you come down here to time frame and you can set the VWAP to whatever time frame you want. I would suggest just leaving it on the chart. So then that way you can change time frames and the VWAP will just automatically adjust to whatever time frame you're looking at currently. Again, just keep it simple. Don't over-engineer the settings out of the gate. You're not trying to win the settings menu. You're trying to read the tape. Think of this as a key rule. Use intraday VWAP for intraday decisions. Use anchored VWAPs or volume by price VWAPs for swing and position context. We'll go over both of those here soon. VWAP is not just a retail toy. It's a benchmark for professional execution. Large funds measure their trading desks against it. If a desk is buying, they want fills below the VWAP. If selling, they want fills above VWAP. Because any client can call a broker and say, give me the day's VWAP. That sets the bar. The desk's job is to do better than that. Now, why does this matter for us? VWAP attracts behavior. When price spikes far above it, such as up here, desks that still need fills are nervous. They're behind the benchmark. That pressure creates pullbacks towards VWAP or aggressive chases to avoid underperforming. Around VWAP, you often see battles, fake breakouts, fast reclaims, quick fades, because big orders are being worked relative to that line. Your edge is not in predicting it, it's recognizing that behavior. Rejection at VWAP, reclaim of VWAP, and sustained distance from VWAP. Those are high information signals. Keep that in mind. Now, if you're day trading or holding 1 to 3 days, start here. VWAP can be your compass. The first 20 to 30 minutes can be noisy. You often see whipsaws, such as right here, above and below VWAP while the market digests the open. I treat that period as probing, not proving. I want VWAP to stabilize before I give it decision-making power. Now, there's 3 core intraday signals from VWAP. VWAP rejection, such as down here, reject, reject. VWAP rejection is when price rallies into VWAP from below and fails. Tries to rally up, fails, rally up, fails, rally up, fails. Think lower high into the line. That's your short bias tail with risk defined just above the rejection. So if you were looking to short Micron on Friday, you could have used any of these rejections here to go short. Now, this might not be the greatest example because the memory market right now is on fire. So I don't think I would have been looking to short that. But you get the point. You don't want to short anything above when it's ripping above the VWAP, but when it rejects the VWAP, that's your entry short. And your stop loss would be right above it. So if you went short here on this rejection, let me zoom in a little bit more. Short here on this rejection of VWAP, you want to put your stop loss right here above above VWAP just to minimize risk. The second intraday signal from VWAP is when the VWAP reclaims. Price breaks above VWAP and holds on a retest. That's long bias with risk at or just under VWAP. So we zoom in a little bit here on Micron on Friday. You can see here it broke above VWAP. Let's use this first break. First break, we broke above. You could have went long, but you want to wait for the retest. Comes back down the retest VWAP, breaks. So there, that signal would have been false. Now, a couple minutes later, breaks back above, retest, holds, comes up, retest again. If it's 2 retests and it holds, that's a surefire signal. It's going to reclaim and hold VWAP. Your entry to go long here. You set your stop loss either at VWAP or just under it in case they do any funky little liquidity grabs. And you would have had a great trade on Friday. Now, the third signal from VWAP is a VWAP trend day. Price launches and never meaningfully returns to VWAP. Pullbacks stall well above it. On those days, pullback entries near rising moving averages while VWAP stays below are valid continuation setups. Now, just some simple practical risk things here. For any reclaim or break below VWAP, always wait for the candles to close. So right here, if you were quick on the trigger and as soon as it got over VWAP line, you're like, oh, this is it. Nope. You got to wait for a candle close above VWAP. Right here was a very decisive close over VWAP. You had your retest, off to the races. There's lots of false breakouts and false breakdowns. Always wait for candle closes to give you confirmation either way. This is also a 1-minute chart. So if you're using a 1-minute chart for your intraday trades, just always kind of sanity check yourself on the 5 or 15 minute so you can avoid some of the noise or getting faked out by false moves. Another little trick you can use VWAP for is scaling into your trades. Scale into strength after the reclaim holds, such as up here where the retest, and you know it's pulling away from VWAP. This is the strength you want to scale into. You don't want to scale into things under VWAP because it's a lot of uncertainty. If you're buying it down here and trying to scale in under VWAP, you're paying for all of that uncertainty. Make VWAP prove itself, then pay up a little bit for confirmation. It's better to be correct and a little bit late than to be early and wrong in trading. That's a professional way of thinking about it. Another trading tactic using VWAP is using volume by price VWAP for multi-day swings. This is a little bit different than what we've been looking at. So if you come up here to indicators, volume profile, TradingView has a visible range volume profile. You can just click on that. And it'll give you the volume profile for whatever you're zoomed in on your chart. It's pretty cool. It's pretty handy. But it gives you a little VWAP line here, which looks much different than what we've been looking at or the current chart's daily VWAP. So let's get rid of this. Get rid of that purple VWAP line that we've been looking at and take a look at this. When you're holding for a week, a month, maybe years, you want to know, am I above where most shares actually change hands? That's where volume by price VWAP will help you. Gives you this line. This line right here is where the most volume or most shares traded hands. This is where the most action was happening. Conceptually, it aggregates price and volume over a look-back window and outputs the average price weighted by where the real participation happened. This line. When price finally reclaims that VWAP after multiple failed attempts, it's often signaling seller exhaustion and a potential regime change. Think the battle's finally over. The buyers now have the ball. You look back through here, Micron's history, the price was always battling right here. It's where the most traders were, where most action was happening. You can see here it fights it, fights it, fights it, breaks down, breaks up, breaks down, but it finally breaks above this line. Off to the races it goes. This is a pretty handy little tool. If you've never tried using it for your swing trades, I would suggest giving it a try. Here's how I use it. If price is below the profile VWAP and keeps failing there, I'm defensive on my longs and being pretty patient. No reason to rush it. If price reclaims and holds above it, especially with rising volume and higher lows, that's a green light to initiate or add, with stops tucked under the reclaim structure. If I wanted to go long micron here, I would have waited for this candle close above the line and started my position. I would have waited and been patient the next day or two to see how it acted. As it pushed higher, I would have added and scaled into it into strength. On the initial trade, I would have put my stop loss at just under this VWAP. As long as it's above this VWAP, I'm pretty confident that the buyers are in control. I don't make decisions based solely on this line. It's just a contextual tool that aligns with structure, higher lows, breakouts, and volume expansion. Remember, these are just tools in a toolbox. You don't use one tool to build a house. It takes many tools and lots of hard work. Something you want to avoid while using this is constantly changing the look back to make the line fit your narrative. Pick a sensible window for your swings or your trades, 20, 30 days, a month, 2 months, 6 months, whatever your time frame is. Just pick that window and be consistent. Don't move this around because you can zoom in and out, and I can make that line go wherever I want to fit my narrative. Just be consistent and use it for your trading style. My favorite way to use VWAP is using an anchored VWAP. Anchored VWAP lets you say, show me the average price weighted by volume since a specific event. The event is your anchor, a major high, a capitulation low, an earnings gap, a Fed day, whatever defined that day or that big move lets you put that as the anchor. Let's use Micron for an example. Here's the top of Micron, all-time high, had a huge red day. So if we anchor our VWAP to that line, it aggregates the data and gives the VWAP as the anchor. From the peak, anchoring at a significant high such as this tells us where the average bag holder is. When the price surges into that anchored VWAP and rejects, you found informed selling. When it reclaims and holds above, supply is likely absorbed. As you can see, it would jump above this VWAP and come back down, jump above, come back down. Tons of selling because everyone who bought up here was saying, just get me out, get me out, get me out. We jump over here to something like Western Digital. Let's get rid of this. You can do the same thing with an anchored VWAP, but from the low. You take your anchored VWAP, put it at a low. Anchoring them to a major washout low like this shows us where the average dip buyer sits. If pullbacks stop above that anchored VWAP, buyers remain in control. So as you can tell, this was a major washout. It come down so much in just a short period of time. Buyers have been in complete control since here. Something else you can do with the anchored VWAP is something called the anchored VWAP pinch. So if I anchor one VWAP from the high, I take another one and anchor a VWAP from the low, you can see they come together and pinch right here. As time passes, those lines will often converge and pinch. Price gets squeezed between them and creates a pressure zone. Breakouts from this pinch can be powerful because both sides are forced to reprice. As you can see right here with Micron, our two anchored VWAPs pinch together, and what's happening? The price is starting to rip higher. These are just some pretty powerful tools, but again, they're just one tool. Don't forget, you need a whole toolbox to build a house. A few things to keep in mind with these anchored VWAPs is don't anchor these VWAPs everywhere. You can just throw them on anywhere you want. Next thing you know, you got anchored VWAPs everywhere and your chart looks crazy. Pick 2 or 3 meaningful anchors max. Don't go above that. Make sure you anchor it to an important event, a big move, a gap up or a gap down. Also, let price tell you which anchor matters. Watch reactions around those anchors. Use anchored VWAP in confluence with structure, your trend lines, your higher highs and lows, and volume. It's just a signal booster. It's not a standalone oracle. Keep in mind, VWAP can mislead in a few different ways. In the first 30 minutes, you get a bunch of whipsaw. Treat early VWAP signals as probationary. Wait for stabilization or confirmation on a higher intraday time frame. Another way is a one-line absolutism. Price under VWAP equals short is way too naive. Context matters. Trend days ignore pullbacks. Another way that misleads is by over anchoring, drawing 5 anchored VWAPs because it looks cool or fits your narrative. If everything is a signal, then nothing is. The fourth way they can mislead is by ignoring liquidity events. Earnings, macro prints, rebalances. VWAP can lurch. Don't pretend the line is sacred when the tape is chaotic. Another way they can mislead is when you have no risk plan. VWAP is a tool, not a stop. Define I'm wrong here before you enter. VWAP equals simple math but professional behavior. Intraday, use it as a decision line, reclaims, rejections, and trend day tells. Multi-day, use the volume by price VWAP or anchored VWAPs to add context. Who's winning the battle of positioning? Process beats prediction. Define your entry, invalidation, and scale your plans in advance. If this helps sharpen your process, tap subscribe, drop a comment with how you're using VWAP now, and tell me which chart you want me to break down next. Anchored VWAP pinches, post-earnings VWAP strategies, or full position sizings around VWAP. Let's keep building real, repeatable edge. Again, if you like this, or this helped you, please share it with a friend, or head on over to asymmetricedge.org. Our next batch of invites will be going out sometime this month to join the community. Thanks for watching, and see you in the next one.